Wow. Okay, the KOSPI just skyrocketed by a massive 3.68% today. And I mean, the market absolutely exploded. We are talking about overwhelming buying pressure and this massive hidden movement of global capital moving right behind it. So let's dive right into the core drivers of today's explosive market action. Up 3.68% on August 12th, 2026. We hit this overwhelming number. And look, this isn't just your everyday simple uptick. It's the result of a powerful, honestly almost violent level of capital flooding in over a single day. It's literally enough to shake the entire foundation of the market. We closed out at 6,579.04 points. So, moving beyond just the flashy percentages, these concrete numbers prove that the market's level itself has definitively taken a massive leap forward. Now, if you look at the broader market, it's completely covered in a wave of green, right? But even then, these two massive blocks just totally stand out. Samsung skyrocketing by 6.68% and SK Hynix by 5.54%. I mean, they absolutely hard carried today's index surge, no question. And get this, a buy-side sidecar was triggered today for the 23rd time this year alone. If you're wondering what that means, well, when KOSPI 200 futures jump 5% or more in just 1 minute, this system mechanically halts new program buy orders for 5 minutes. It's undeniable, hard proof that the buying pressure flooding the market today was abnormally fast, just fierce. So what exactly was the global trigger that sparked this whole massive surge? NVIDIA. Teaming up with Wall Street's biggest asset managers, NVIDIA is raising an unprecedented $500 billion in outside capital. All of that just to build out AI infrastructure. It's a real game changer. And the dazzling earnings we're seeing from major tech giants, they really just sealed the deal. CoreWeave's revenue exploded by 112% year over year, and Supermicro revised its next quarter revenue guidance up to a staggering $14.5 to $15.5 billion. It's basically undeniable data that AI cloud usage and server demand are literally exploding right now. But here's the catch. Demand is exploding, yeah, but supply is falling drastically short. The situation is so severe right now that even non-AI industries, think automotive and medical device manufacturers, are stepping up and petitioning the government to intervene. Why? Because they literally can't secure chips. This extreme memory supply shortage is spreading in every single direction. But all this high-level macro data, it ultimately comes down to two physical pieces of hardware: Samsung and SK Hynix's HBM3E chips. These specific chips are the absolute core of the severe supply shortage the world is currently experiencing. They are the real stars behind today's market explosion in Korea. Now, following that global catalyst, there's another massive detonator that totally set the domestic market on fire: Singapore's sovereign wealth fund, Temasek. They announced they're aggressively increasing their AI investment allocation from the current 6% up to a massive 15% of their total portfolio. And what's really noteworthy about this is that Temasek judged memory semiconductors to be the most undervalued segment within the entire AI value chain. Because of that, they decided to make their first ever direct investment in the Korean stock market, specifically targeting Samsung and SK Hynix. I mean, they basically poured gasoline on the surging stock prices. As a result, foreign capital was concentrated to a truly violent degree. A staggering 81.7% of today's total foreign net buying poured into just those two stocks, Samsung and SK Hynix. The entire rest of the market combined, a mere 18.3%. Let that sink in. So when massive capital concentrates on memory like that, what happens next? Well, if an increase in memory demand is a sure thing, production companies will naturally execute aggressive capital expenditures to expand their capacity. This is the immediate ripple effect, and it flows straight into semiconductor equipment stocks. And as a logical result, equipment stocks just took off simultaneously. We saw deposition equipment maker Jasung Engineering up 7.14%, Wonik IPS up 6.49%, transfer equipment maker Rorsey Systems up 7.03%, and even Hanmi Semiconductor in packaging catching a 2.11% bump. Market supply and demand are fiercely spreading across the entire equipment sector right now. Okay, let's look past the flashy index gains for a second and dive into the hidden microstructure of the market. Within this massive flow of capital piercing through the financial district, who was actually buying and who was selling? Let's check out the extreme divergence in how the different players acted today. Honestly, it's a stark contrast. On one side, the smart money, foreigners and institutions were aggressively sweeping up and accumulating shares, which just incredible momentum. But on the other side, we saw a fierce sell-off by retail investors, essentially unwinding their positions. Let's read the exact numbers on the tape. Today alone, foreigners net bought 2.84 trillion won, and institutions bought 527.8 billion won. On the flip side, though, retail investors dumped a massive 3.19 trillion won. You can see exactly how violently the market changed hands today. And here is where a really fascinating, game-changing signal emerges: 96.5%. Foreigners explosively bought back 96.5% of the Samsung shares they had sold off over the previous 3 days, and they did it in just 2 sessions. That is a complete total pivot by massive capital. The trend for SK Hynix tells the exact same story, too. Foreigners scooped back up 34.5% of the shares they had dumped over 4 consecutive days of selling, all in just one single day. These numbers show just how incredibly fast and powerful the global repricing of these assets is happening. Actually, when you analyze the pattern over the last 5 trading days, a perfect mirror image appears. It's a true inverse pattern. On days when foreigners sold, retail bought. And on days when foreigners bought heavily like today, retail completely sold off. The capital flow is moving in the exact opposite direction. So global capital is rapidly repricing the value of Korean AI memory companies at a truly violent pace right now. Which begs the question, could it be that retail investors are exiting too early, right at the very beginning of this massive momentum? Think about it. If you would like to receive news on the closing of Asian stock markets before the New York stock market opens, please subscribe.